Well, you want a boots on the ground understanding of what's happening with the UK budget, also how a European might feel about the US elections, and then also we're going to talk about how this gentleman feels about the Bank of Japan, even though there's a BOJ meeting tonight, how he feels overall about where the BOJ is heading. Well, I'm bringing in Beat Nussbaumer. He is from Macro Beat, and it's good to see a Beat. It's been so long since we've met up. It's great to see you.
Hi, like very nice to be with you again. Yeah, to be honest, it just time flies. I was just thinking the other day, like, where's 2024 gone again? It's just crazy, right?
Like
It,
that. And
it
and it's
switch.
like oh my gosh, there's another US election upon us. And it's like, wow, that happened 4 years ago. Wow, who would
Yeah.
have guessed it? Hey,
So great to be with you again.
it is really nice to have you here. And let's talk about a few of these topics because I want to start off with what's happening right now. I want
Yeah.
to talk about the UK budget. I mean, this is the first time in 14 years Labour's delivering a budget. Sterling's been kind of all over the map, but I know you've been watching the headlines. I know you're probably trading sterling. Give us your point of view. Being in the UK, you were a Swiss living in the UK. What are your thoughts?
Okay. Um, well, first of all, thanks for having me, Blake. Like I said, nice to be
Pleasure.
back. Um, to be honest, I obviously for people that may not follow the UK that closely, we obviously had a big election in July. We had a big shift from 14 years of Tories, which you would call right. I mean, just right of the middle, not like, crazy right. And we gone opposite to the rest of Europe, we gone left. So we have the Labour Party in charge for the first time because people been so fed up with how things are in the UK, the Labour Party want a landslide. That means like they have such a big majority in Parliament, they just can possibly do whatever they want. The problem is, and here it's a small build up to the budget. Don't worry, we talk about it in a minute. So what we had is the Labour Party didn't actually need to announce any policy in their manifesto going into the election because people are so sick of the current government. The Labour Party would have won anyway, right? So they just kept quiet about their policies and now they're rolling them out. What we now start to see is that actually they're a lot more left than people did expect. Even people that traditionally vote Labour Party are shocked. I call Mr. Keir Starmer the Karl Marx, right? That's how bad it is. And that's about my take on the budget. There was a lot going on in the news in the last few days where the Prime Minister tried to explain what he means is a working people or a working person, because the manifesto said they're not going to steal from the working people, as in tax-wise. And it turns out that if you work and you have a few shares and a few savings, you're actually not a working person. So that's basically the definition now in the UK. So for an American, that be shock, horror, or whatever, because that it doesn't get closer to Karl Marx than this, right?
Yeah.
Budget in this moment. Well, first of all, the Labour Party obviously claims there's a 20 billion black hole left by the Tory party. When she was asked in the last few months, she didn't actually, Reeves, that is the Chancellor, didn't actually show us where or what that black hole is. So they just claim there is one, right? So let's assume there is one. Basically, she's stealing left, right, and center from businesses. So yes, they don't increase the tax, national insurance tax for workers, but for businesses, for employers. But guess what happened? Small and medium-sized companies probably going to hire one person less, or it's going to, less salary increase or wage increases. They may look at various other things. There's a tax on petrol again that is going up. She freezes next year, but she undoes some of the tax cut. Long story short, wherever she can steal some money, she does. The only positive element of the budget is that with the new sort of fiscal rules that she applied, which is okay apparently from what I read also from experts. If you change the fiscal rules and you use the money that you set free for real investment, infrastructure, and other stuff, it's actually long-term a positive thing. So she, I think, sets free about 50 billion that goes into building of hospital, this and that. So there's a small positive element, but it's borrowing. Right? It's borrowing. It's not like we have the money. It's borrowing, right? It's just borrowing in a nicer way. not that it's a trust event that things just collapse the next day. I think what we see on the budget, it's going to be a medium to long term sort of leak. I'm very bearish sterling. I've been short sterling, but I played through long euro sterling because I don't want to be exposed to sterling dollar right now because of the US election. So I just carry a sterling short in the crosses. At some point, I may or may not flip that back to cable. Maybe I just leave it in the crosses. I'm extremely bearish on the United Kingdom, sadly. I think the Labour Party is going to kill this economy in the next few years. The budget may not have an immediate bearish impact because they made sure they don't repeat the mistakes that Truss was making. So it's probably better balanced for the market in a sense of an immediate bear. But when you see where she's stealing money at the wrong places, I really do think people will suffer. I think businesses will struggle. And I think if I believe some experts that I was reading last week, this whole thing ends end of the decade, so 2030 with an 80 billion black hole.
Oh my gosh.
Comment
Well,
on that. I don't know, to be honest. It's just what other experts say. I'm not a budget expert.
sure. So let me can I
Yeah.
ask you a question right now? The candlestick chart is the gilt market, and this is the 10-year, and you're seeing yields rally. So gilts are obviously falling. This is the whole Liz Truss situation here. And you saw what happened with Sterling there. You said it might be more of a leak and it's not going to be a Liz Truss type of moment, but could we see some downside pressure in Sterling as a result?
Yes. To be honest, this is how I'm positioned. I have that position for like 2-3 months. Wherever, to be honest, because there's no urgency in it. Every time Euro Sterling rallies, I sell a few. When it comes back down, I buy them back. I just always make sure I have a core short Sterling position. Because the thing with Sterling is, and that's why sometimes you end up having to pay a little bit of negative carry, is when Sterling goes, it goes. You don't see it start, right? It just goes. And I'm just worried that when it goes, then you start to go, oh yeah, I should have done this, and then you wait for it to come back and it doesn't, and blah, blah, blah. You know the story, right? It just goes without you, right? So I'm in it. To be honest, I made some nice money trading because it holds at nice levels. But I think my personal view is the Tories weren't great, right, of late. And since Brexit, that's another problem we have in the UK that just doesn't work. And so we have problems. We have problems at all ends. So we have no bloody money, right? And because they keep on keeping grow down with some stupid decisions, there's no way to pay us out, right? Because you need grow to pay for the debt.
Sure.
And so I'm worried. The Labour Party came in and made wage deals with the unions, right? So they stopped striking. So they gave them some stupid 10 and 20 and 25% hikes. They gave various industry, like the sort of more public economy money, and they taxing the private economy. What they don't understand is who is paying the bloody taxes. Sorry, my French, but that's the private sector, right? The rich pay most. Well, the rich, let's say the 60, let's say the 60 richest Britons pay about £3 billion in taxes. Then comes the next bit, what we call the top 1%, which is anyone that earns £180,000 or more, pays 28, near 30% of the taxes. Right? That's just private individuals, right? So if you start to keep on claiming money from those people that earn, and the little example I gave you in the introduction about what this government thinks who a working person is. So there is you work hard, you save a bit of money, you have a few shares just to kind of look after yourself, so you don't really need the state to go and ask money from the state. So if you've done that, you're the most stupid person according to the new government, right? Because you now get taxed for that, right? You already got tax-free, but you get taxed again, right? So this whole sentiment, and I think it will be that which will have this leak. There's about about 6,000 millionaires that plan to leave.
Wow.
Only one country has more right now, which is China. I have a link somewhere that I was reading. It's like crazy. There's a guy I've been talking to who is in private wealth. He said he's like busy like crazy. People just shifting stuff, right? And you know what the Labour Party should know? Last time they tried to tax the rich just either leave or they find ways not to pay it. You actually end up earning less because, to be honest, some of the rich, they don't mind paying a fair tax. But if you start to go after them, right, they do find ways not to pay. Trust me, right?
Yeah, well, we might witness the same thing in the United States, moving forward. But maybe in the years ahead. But let's shift gears because I appreciate your sentiment on what's happening with sterling and your bearish sterling. But let's talk about the U.S. elections just because it's coming up in the next couple of days, and I'd like to get your view as a European living in the U.K. And you're not necessarily political bias, if you will, but kind of how you feel looking in, but how the market's also being positioned with a potential Trump second presidency, and how you look to trade it, and how you see let's just say the dollar and maybe risk appetite overall.
Yeah. Let's talk about the market first, and we can then talk about the European view about it.
Okay.
So obviously, what we both already see is obviously the trade in the bond market. So the market is definitely worried about, or the market is pricing a Trump presidency, which will see bigger spending, tax cuts, which obviously puts the fiscal situation a little bit into question. That is driving up yields. Obviously, the tariffs will be inflationary. So you right now you have like three camps in fixed income. The one is that just reprices the US, which was fair enough because the data suddenly reaccelerated. So instead of soft landing, we're talking no landing. So that part of the move in fixed income makes sense from a reprice point of view. But then you have one part of the market that obviously puts a Trump trade, the budget, sort of fiscal side into it. And then there's a camp, the inflation camp, who is worried about the impact of tariffs, the tariffs going to have on the US economy in terms of prices. So now you have these three camps. So the data later in the week will show where non-farm is going after the JOLTS data showed that the labor market is cooling a bit. ADP today was strong, but we know the correlation is weak for the non-farm pay. So we want to see if one camp starts to sort of change, right? Because right now it's very hard to see how much of this moving bond market right now is Trump. We have to assume a lot of it is. Then what we see in the effects, and that is where the problem starts. The market right now, because it's very algo driven, still is playing the old correlation. US yields up, dollar yen up, blah, 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 right? So we have a second win for the dollar, which partially, as we said, is justified from the US economy is stronger than we expected it to be, and it's definitely stronger than the rest of the world. So that makes sense. But what doesn't make sense is this latest run up in especially dollar yen, because the market is not consistent. If you're worried about tariffs, right? In 2016, Trump did not come in on tariff ticket. Tariff came in 2018, and we had the trade war with China, markets started to sell off, risk off, equities lower, blah, blah, blah. Now in 2025, when he sort of were to take over, we start on a trade war ticket. And if you listen to him, and this is where the difficulty is in a positioning sense and trading sense, is everything he's saying going to happen or not? That's the vacuum that we're going to enter after the election, should he be elected, until January, to actually see what he's really doing. Is he doing 20% on everybody just to make taxes go away? So he's tries to reduce or get rid of income tax in favor of tariffs. Some people in his administration say you can't raise that much money from tariffs, right?
Right. Yeah. It seems impossible, but how far can he push the envelope?
Yes. But the problem is, so he's going after China, as he said. So there are going to be quite some tariffs on there. He's going to clamp down on this. Suddenly, Mexico being the biggest exporter for the US, which is obviously indirect Chinese stuff. So he's going to close that hole. So long story short, it's difficult right now to be too bullish on dollar yen. I understand why it's here, because the market is trading this yield story. But that could very quickly turn into, I don't think 2024 election in dollar yen is going to be the same as in 2016. In 2016, we go, oh yeah, he's going to be bullish, business and blah, 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 right? That was, yeah, I get that. So that rally was probably easy to see. This time, I think it's 50-50. Why do you think Aussie suffers? Canada is suffering. Yeah, one part is the dollar strength, but the other part, if you look how much Aussie underperforms, even against other currencies, yeah, it's a China worry, right? Dollar China is, so dollar CNH is bid, correlates with the Aussie. The Canada looks over to the Aussie, goes, I don't like this, right? Then look at the Mexican peso, which is offered anyway, because everyone goes, oh, I'm worried about Trump, right? So you have to understand which dollar strength is true dollar strength and which part is actually risk off or risk weakness. If you look at Aussie CAD and MEX, I think there's a risk off in the make for the tariffs, for the worries of what is happening to the US economy and the world economy as a whole. And then in that scenario, dollar yen at some point would just nosedive, no matter what the bloody yields do. But, and I just actually said this to someone this morning, sometimes the risk when you know too much, right? The market is just going to run this yield versus dollar yen story. The algos will just be plugged in until that story breaks, right? And it breaks once the market realizes that actually the yields go up for the wrong reason. The yields go up because of the strength of the US economy, fine, no problem. But if the yield starts to go up for all the worries we have, from fiscal over to, this or that, this is not a positive dollar story. So personally, I'm fighting the rally in dollar yen, especially as we get towards 155, definitely when we get back to that 160 level. But let's leave it there. So I think
Oh,
the
yeah.
market is long dollars, no doubt about it.
Well, now you're talking my language, Beat. Let's talk a little bit, and I'm going to save you the as a European, how do you feel about the election? I'm just going to save you from that. Let's talk about the Bank of Japan, because I know the BOJ's tonight, but now you're talking yen, and I'm really excited to hear what you have to say. I am like you. I actually think that the yen is probably a buy somewhere up here.
Yeah.
Between you just gave me some levels, 155 to 160. But let's talk about the BOJ, and they are meeting tonight. By the time our viewers are watching this video, BOJ is going to be come and gone, and we might have seen some volatility. But let's look at a big, broad brushstroke. How do you feel about the BOJ, where Japan's position and what they have to do with monetary policy versus anybody else?
So you remember, in August, obviously we had this massive meltdown, which suited probably you and me very well, with the move down in to below 140 in dollar yen. And we had this massive risk-off move on the crosses, cross yen and dollar yen. For me at the time, 140 was the target I had after this turn at 160, because I go the intervention, the rates adjusted. So 20 big figures. And then the BOJ got a bit nervous down there. The Nikkei sold off at the same time. So suddenly BOJ started to moderate their language on policy, because they suddenly realized, oh yeah, we didn't want to have it at 160, but if we break 140 and the story continues to be 125 before we think about it, right? So they got a bit nervous that the yen appreciated too quickly. So they turned a bit soft. Now, there's something that happened now in the last few weeks that we didn't expect, which is the lower house election, right? That was not part of the plan for 2024. Kishida said he's not going to stand for re-election. That caused that leadership election that in the LDP, which Ishiba did win. He did not know anything better than to call snap election, which we had last weekend. So part of the yen weakness is also related to the LDP and Ishiba and his coalition partner to lose the election, which is the first time the LDP lost the election. So they were in power since 2008, right?
Yeah.
So now, why is it important? Usually Japanese politics don't matter. This one does matter. The new government, so we had the new head of BOJ, Mr. Ueda, taking over in April. So he is the master of the normalization of BOJ policy. That's his task. And Ishiba, who was voted in as the PM a few weeks ago, he would also be in favor of normalization of policy, of making the state be a bit smaller, reduce the footprint of the BOJ in the market. Now, the opposition is exactly on the other hand. You may remember where we had this quick run up in dollar yen to 146.5 when it was between Ishiba and that lady, Taichi, whatever her name is. She's against rate hikes from the BOJ. So we had this quick run up in dollar yen to 146.5. Then we collapsed to 141.5 when Ishiba won, right? So everything felt like it's done. Now that they lost the election, the opposition is also not in favor of policy normalization, right? So that puts the BOJ in a very difficult spot. Are they independent? Yes, on paper they are. Are they truly independent? I would say probably not so much, right? So they go a little bit in lockstep with the government. The government has influence in the policy of the BOJ, not in a sense that they can say what they should be doing. So they couldn't come and say cut rates. They wouldn't do that. So that is where the independence works. But if now the BOJ would say, oh, we want to hike rates tonight. No, there's no way. So tonight's meeting is a non-event, right?
Yeah.
Because we now don't have Ishiba is right now the prime minister, but in theory, he lost the election. So on the 11th of November, we have the first diet of the Japanese parliament. That is the first occasion of naming a new prime minister. Ishiba tries to hang on there, tries to negotiate a coalition. Even he would try to rule with a minor coalition if that works, or a minor with a minority government if that works. I don't know. So this was now all important because you can't now, right now, talk about dollar yen with not talking about politics for the first time in 20 years, I would say, right?
So with that, can I ask a question really quick regarding the BOJ? So if the BOJ, let's say they really wanted to raise rates tonight because they feel like this is their opportunity, yen's weak enough, they can actually surprise the market, raise rates. Couldn't they just go ahead and do that? And they don't have to worry about Ishiba and anything he has to say right now.
To be honest, I had this idea about a surprise rate hike before the election outcome. Because they're all like, bloody hell, easy peasy, 153. There's no better opportunity than now.
Sure, right? That's my thought.
It's like totally agree on that side. Right. This is why in trading it's also very important to know culture, right? And culturally, there's no way. And to be honest, I would love to be wrong on that one because I'm long yen. But culturally, it's unthinkable of the BOJ to hike rates tonight in the current political vacuum of whether the Ishiba is going to be still prime minister after the 11th or not, right? It could be that someone from the opposition, they create a majority, and because the opposition together have the majority right now, so they could, if they create a deal, they could actually ask to put the prime minister forward. So a new prime minister who then would maybe not sign up to the normalization of policy. That doesn't, as I said, mean the BOJ is going to cut. They will still hike at some point, but that could be April of next year, right? Yeah. So the whole thing is slower. They will demand. The only thing that the opposition still has to figure out, they all demand wage hikes. And wage hikes and no BOJ hikes just don't go together, right? So we are in a very difficult spot. I would say the following. My line in the sand for dollar yen was 155 prior to the election. I would have thought that, they started to make noises above 150. Now they're a little bit quiet since the election. That's a really setback. So if you're long yen, you have to kind of be a little bit careful here because this could just overshoot a little bit more. You have, if 10-year US goes to 450 in a run up to the US election or in the aftermath of the US election, and we do not have enough voices from Japan, in that whole vacuum, you could suddenly have another 500 points run up higher. But I would say, they have to come back in at 160 if it were to overshoot, right? So I think the BOJ would still then have to do their job, which is a weaker yen creates additional inflationary pressure, right? So if we would just have a discussion about policy, there's no doubt that the BOJ will continue to normalize policy. Inflation is a problem. Wage deals are above the target that the BOJ did look at, so it's north of 5.5%. That means the inflation stays in the pipeline. And you're going to get second round inflation next year, right? So from a policy, and now comes the key point. I want to mention this. At the last BOJ meeting, Ueda said he's going to carefully watch the US soft landing. At that point, he still said soft landing, right? Now, fast forward, hey, wakey, we're not talking soft landing anymore. We're talking no landing, right?
Yeah.
So if you now miss a window, you sit there and goes like, oh, 2 months ago I was worried about where the US economy is going, but it's going that way instead of that way, right?
Yeah.
That puts them straight away behind the curve. Dollar yen 153, US economy stronger, right? No landing. We're starting to price out some of the cuts in the US. Suddenly there's like, ooh, Houston, we have a problem, right? So if it not were for politics, I would say we get a surprise hike tonight, and maybe a second one as early as, January or something. Right now, I have to pause and say sorry to sound boring. Tonight is going to be, they try to be as neutral as they possibly can be. I've just to check, do we have another meeting in December? No, BOJ, 19th of
I don't think so. Do we?
19th of December.
19th of December.
Remember last year in December, Kuroda sneaked in the lifting of the cap,
yes,
right?
yes.
So they use the December market where they assume most people are kind of holidays.
Yep.
So don't rule out December. I think there's a very limited chance today. There's a high chance of December. And today I read that Ishiba is negotiating with some smaller parties. If Ishiba were to stay, you can start selling dollar yen right there and then. Because then we are back to 155 being the red, like the line in the sand. Policy is going to remain normalizing policy. It's probably too late for tonight anyway, but that would then put December on the map. And make December live.
Well, we're not going to hold your Beat, and I'm pronouncing your name the way it should be pronounced. Although you chose to tell people Beat. It's really nice having your perspective here in the markets. I really appreciate it, and I've always been a big fan of your work. So with that being said, how do traders follow what you do on a day-to-day basis?
Yeah, traders can follow me on macrobeat.co.uk, which is my website. My Twitter, I think, is macrobeatl or something funny. So I'm out there on LinkedIn, Twitter. I show a little bit of my face out there, just in a small part. But hit me up. I'm always happy to give people a free trial of my service. So hit me up on the website, send me a little message. You just can press the button there for a free trial. It is really for FX. While we talk rates and commodities and stuff, I'm a macro FX guy. So someone that is only trading the S&P, probably shouldn't stop by. But someone who is at a global macro or FX, that I'm sure I can add some value, hopefully, to people.
Well, you're definitely adding value today. So I want to thank you from
the
Traders Summit community, and really good to catch up with you. And I'm going to look to catch up with you somewhere around the holidays. It might be just after the new year.
Perfect.
You take care of yourself, Beat. And
you take care.
Thanks for spending your time with us.
Thanks for having me. Thank you. All the best.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.